Silver soars to record high above $110 as macroeconomic uncertainty fuels demand.
U.S. economy. Growth projections revised upward. TD Securities. Gold sets new record on safe haven flows. Yardeni sees $10,000 Oz in 2029. Gold breaks $5,000 for the first time as investors seek refuge.
Canada. Business outlook or business omen? Rabobank. U.S. stocks may show a lack direction in early trading. Pound to yen weakens as intervention chatter fuels broad yen demand.
This is when gold is expected to hit $10,000, according to Yardeni. U.S. dollar sell-off reinforced by yen intervention risk, MUFG.
The next U.S. NFP report might be pivotal for the markets and lead to sizable opportunities.
All right. Guten Morgen. I forgot to eat breakfast. I'm sorry. I had to get some food down my belly. Just totally forgot. So, good morning. I hope you are surviving the snowstorm here in the United States of America and Kenyatta. Got a very important week. Lots of news. A little thing called the Federal Open Market Committee. So, markets are going to move. That means they're risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So what you're seeing here is a combination of TRADARS and Trader's Way. Technical analysis, fundamental analysis, market sentiment analysis, AI analysis, and human analysis. Oh, faux show. Little of everything.
The next U.S. NFP report might be pivotal for the markets and lead to sizable opportunities.
U.S. dollar sell-off reinforced by yen intervention risk, MUFG.
Silver soars to record high above $110 as macroeconomic uncertainty fuels demand.
U.S. economy. Growth projections revised upward, TD Securities. Gold sets new record on safe haven flows. Yardeni sees $10,000 Oz in 2029. Gold breaks $5,000 for the first time as investors seek refuge.
Canada. Business outlook or business omen? Rabobank. U.S. stocks may show a lack direction in early trading.
And the markets are now open. So, HOTTO, HOTTOGO. Let's take a look at the risk sentiment. How are the investors in all the different asset classes trading? That's what we're looking at. Not opinions, but how they're trading. Slightly bearish. So we're kind of neutral to flat to zippity doo-dah as of today. Weekly and monthly, they're offsetting each other. So overall, sort of flat. Hey, it could be worse. But remember, we got the Fed decision on Wednesday. We also have a lot of earnings this week. And now to get these scores, we look at all of this stuff and we do it on 3 time frames and then we weight them. Yeah, that's it. Yeah, we only look at like a couple of hundred variables, but good enough for the girls I go with. So overall, based on what everyone else is doing in the market, yeah. Last week was kind of down. Maybe this week will be up. We'll see. Next big spike coming out is actually the Aussie jobs report, and that's nowhere near here. Taking a look at things that are out of position. Bitcoin's down, but as expected. Okay. Anything else standing out? Okay, not really moving yet. Looks like dollar weakness. Commodities not really moving yet. Crypto down. Treasury yields fairly flat. Cool. So it smells like a Monday. Oh, TT says, hey, so buy Bitcoin. Well, the way that you want to look at this is that Bitcoin has a negative score, right? A score of negative 3.32. So TRADARS expects Bitcoin to be down. And right now, as of today, Bitcoin is down about 0.5%. But that's expected. Cool. So let's take a look at trend. And we could jump to Bitcoin to continue with TT here. Hey, TT, check this out. Let me refresh. I got a cache. All right. What do we know about Bitcoin? Well, let's break it down into technical analysis. This is the price of Bitcoin going back to the 23rd. So over the last several days. So what you want to do is look at the long-term direction. So statistically, it's bearish. If you look at it on a shorter time period, it's also bearish, but one standard deviation above the mean. So you would expect a rollover. And on the very short term, it's up. So is that okay? Put them together. What you're looking at is, yes, you want, if you are a bear, I don't know if you're a bear, but what we're looking at here statistically is if you're a bear, you want to sell high as defined by the mean or the standard deviation. You want to look for short-term up in a long-term down because bears want to sell high, right? So let's do it over here. A bear wants to sell after the green is rotated over and continue down. So in the short run, even if you're a long run bull, a bear, in the short run, you want to see bull or green. So here's our down, here's our green, and now you have two prices in which you could start anticipating a move back. Okay, TT says it's going to go back to 100. Well, that may be true. But on the long run, that ain't happening right now. In the medium run, that is not happening right now. So you would be too early. And you probably already know that. You don't buy lower lows, you buy higher lows. Well, we're not making higher lows right now, so you're too early. Now, you might want to jump around and say, well, what's the seasonality of Bitcoin? And yeah, Bitcoin does all right this time of year. Okay, there's our projection. Yeah. Oh, wait, you don't have the whole entire year planned out for Bitcoin yet? Oh, I do. Here's the whole entire year for Bitcoin. Yeah. Oh, yeah. Well, that doesn't matter. So, so let's talk about that. A quick lesson here. If you are a bear, or if the market is bearish, don't use M2. You're using a bullish setup in a bearish market. You're doing it wrong. You're like, well, but Wayne, you say the space between the central pivot and M2 is a buy zone. That is correct. In an uptrend, not a downtrend. So and I'm telling you statistically, it's bearish. It's not my opinion. Okay. Yeah. Okay, so you might be right. That might be totally cool. Right on, M2. Yeah, fine. But it's bearish. Okay, so another way of looking at it is let's do a longer term position trading analysis and do crypto. Okay. My projection. Well, first of all, here's Aiden's projection. Fundamentally, it's bearish. So you're a bull. Great. We can't really prove that fundamentally. Okay. And then we're looking at long-term technical analysis for Bitcoin. It's not bullish. Nothing suggests on the long term bullish yet. You might be right, but not yet. And then when you do statistical analysis of the price time continuum, including standard deviation and linear projection, it's more likely technically to go to 83 than it is 100. So I don't know how you set your bias, but none of mine and none of this analysis here is personal bias. It's quantitative bias. This is what the data show. I know this isn't plotting properly, but we have it bearish with the target of M1 for the year. And I can't quite see what it is, but it's close. It's not plotting, but I don't know. It's 75. Okay. Well, actually, they overlap. So about 80, right? 79,500. Maybe a little bit less. I got to get the scaling correct, fixed. It's just not plotting it properly. Cool. So, anyways, you might be right. I just can't prove it. Okay. So, if you're going to go weekly on me, it might be very short term. We could check that. We can check the swing trade for Bitcoin, and it's down. So I'm looking at a 4-hour chart here, fundamentally bearish, technically bearish, projected to be bearish. And you're using the M2, but I'm using M3 central pivot point because it's bearish. I wouldn't buy it because it's an M2. All of this would have to go bullish, meaning the trend projection would have to be up, not down. The moving averages would have to be up, not down. And so if price was making higher highs and higher lows with a 21 or above a 55 with a linear projection standard deviation pointing up, then I would use the M2 as a buy zone, but it's the opposite. Ethereum, same thing. You can see here we're using M3. Ripple, again, you can see we're using M3. So the idea here is sell the rallies. Linear projections show it to be quite flat right now. So maybe you're right. Maybe over the course of several days, it changes direction. It just isn't doing it now. ADA, bearish. You can see M3 as a sell. So you would sell rallies here. 21 is below the 55. So we are projecting this to come down to, basically 30. Doge, bearish. Okay. Bearish, 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 bearish. On the 4-hour time frame using monthly pivot points, but we're also looking for overlaps of weekly pivot points. So you can see that here. So again, you might be right. Maybe we do go to 100,000, but I can't trade maybe. That's an opinion, not a bias. I'm not sure where you get that. So I'm not telling you you're wrong. I just can't confirm it. It doesn't seem right to me. Not quantitative. Oh, snap, though. That was good. Yeah. Okay, let's go
Tech
back.
stocks mixed.
Let's check out the trends. Ready? Let's do dollar pairs. Okay. Dollars week. Done. How long did that take? Let's review all the charts. I have a caching. Keeps caching. Old version. Should work now. Huh. It's not loading the new version. I'm going to have to do a hard refresh. I'll try that. There we go. Yeah, I had to do a hard refresh. Clear my cache. All right. So, up, up, up. Up, up, up. Okay. Aussie dollar, up, up, up. Kiwi dollar, up, up, up. USD yen, down, down, down. Even better, look at the green. That's what we want to see. We want to see the green because we want to sell high. Okay, that's a good trade too. Okay, down, down, down. So we have beautiful congruency here on the dollar pairs. So now you know that the dollar's weak, and then we've analyzed the trend on 3 different time frames to show you which ones are bullish and bullish or bearish, aggressive, bullish or bearish, conservative. Can we do that with yen? Yeah. Yen, okay, USD yen down. Euro yen down. Pound yen down. Aussie yen, ooh, okay, it's down, but it's different than the others. Aussie seems to be stronger than the others. Okay. CAD yen down. And Swissy yen, okay, down but different from the others. Still technically slightly bullish. But probably, see, we're on, when we do the long-term trade here, we're bouncing off of 1 standard deviation below the mean. Okay, and the slope of the mean is 0.00116 per hour. Okay, the standard deviation of 0.8697. So we are bouncing off the lowest low we could possibly get while maintaining a long-term bullish bias. Now, you probably also understand a lot of this yen straying is related to intervention. Oh, cool. So we know things like Aussie's a little different. Swissy's a little different. Let's take a look at Swissy now. Let's see. Bearish, 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 bearish. Hey, look, in 1 second, you know, you're a buyer of the Swiss franc. Did you know that? Just like in 1 second, boom. Which ones are the best? Well, we're organizing them by very bearish. So those are very hot. Okay. To less, but they're all very bearish. Okay. So like this, sell the rip. Looks great. How about this one? Ooh, there's that Aussie. That doesn't look like all the others, huh? Yeah, well, we know Aussie is strong as well as Swissy. Hey, good to know. Bearish and bearish. Oh, look at Kiwi. Kiwi is also strong. All right. So what does this tell you? Maybe if you were going to buy some Swiss franc today, if you believe we're going to be in a risk off mode today, okay, Euro Swissy, pound Swissy, all that kind of stuff. Now, historically, I think this particular week of the year, week number 3, is what I'm counting this as week number 3, very often is risk on. So you might have a different opinion. I'm just saying, I'm not here to give you an opinion. We have the facts and the data. But if earnings came out poor, or the Fed doesn't cut and for some reason that surprises people, I don't think it should. But nonetheless, if suddenly we don't get risk on, we get risk off, okay, well, Swissy is probably going to do well if it's risk off. However, this is typically a risk on week. So you want to pay attention to this. If this is going positive, then those Swissy trades are less likely to work because Swissy would likely be weakening, not strengthening, because it's a safe haven play. Well, you don't need a safe haven play when everything's working. You know what I'm talking about? COT data came out this week. I hope you've reviewed it. Look at this. Aussie, yen. Okay. Again, CAD. Money flowing out of CAD, money flowing into Australia. And, well, you already know yens are on fire. So those are all moves in institutional traders. For sure. Look at this. These situations are interesting in the day trading because Aiden's bearish, but the moving averages are bullish on a 15-minute chart. However, Aiden has also noticed that prices drop below the moving averages, so neutral. Medium term or short term bear charts are, or if you're using moving averages, are bullish. If you're using MACD, it's still bullish. But Aiden doesn't like the fact that prices drop this far and then with a linear projection lower, boom, 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 boom. No, for sure. I've mentioned it multiple times that the third week of January is very often a good move week. Lots of good vol, sometimes bad vol, but the markets are likely to move. And it's specifically because of earnings and specifically because of the Fed meeting. So one would expect decent earnings and a neutral Fed. So I want you to think about the outcome of that. But absolutely, earnings are important, for sure. Much more than last week, because this week is really heavily focused on tech. So what you should be doing is analyzing the risk score on our risk radar so that you can see it go, like, let's say last week, there was a lot of bearishness in our scoring, and then it improved, and we kind of ended the week neutral. Well, over the next, hours or days, or let's say throughout the week, you want to keep looking at the risk radar because it's looking at so many variables. It's so sensitive that you want to see it change. It's either because we're basically neutral. So if the people say, "Oh God, look at these earnings. That's risk off," then you're going to see it right away. Aiden is doing dozens and dozens and dozens and dozens of calculations. You're going to see it because like changes in the yield curve or something, right? Like there's so many variables that would just be one of them, because with the yield curve he's looking at the shape of the yield curve, the duration of the yield curve, the change in the yield curve over the week, as well as the spread between the 2 and the 10. That's just yield curve. He's looking at dozens of other things too. So when you put it all together, the market aggregate, all the treasury traders, all the bond traders, all the stock traders, all the commodity traders, all the Forex traders, all the crypto traders, we're watching all of this in real time and calculating the correlations and then attaching the correlations to the risk and then correlating that. So all I'm saying is pay attention to the risk radar. It might go like risk on. Everything is right as rain. Well, you could feel it or you can quantify it. Yeah, and being able to quantify it should be able to give you the confidence to A, do the proper trade, but B, stick with it. History tells me, and I don't know if I'm correct here, it's just my experience, but I expect this. I mean, I've been talking about the third week of January for 20 years. Like, I'm not making it up. I just can't, I can't verify because I don't break it down week by week. But nonetheless, here's how I feel. That starting this week, it'll be a good week and it'll go risk on, and you can trade all your risk on assets. And the stock market, like the S&P 500, is going to go up, and it'll go up for a week or two, and then I'm going to be ready for it to not go up. Yeah. And that's where it'll get scary if it's double tops, head and shoulders, because then I could do further analysis and say, well, if that double top or head and shoulders forms on the stock market or whatever risk on asset, I'm like, well, that's a reversal pattern. That's suggesting using technical analysis down. Then I can do seasonality and go, oh my God, this could fall all the way to April. If that reversal pattern in the risk on asset holds, not only would it be down for a day, shoot, it could be down for 9 weeks. And that's why having this data is like, oh my God, well then I know the magnitude of the risk. It's not just a double top. It's not just a head and shoulders. I could say, well, I feel like it's going to go up because I think AI is going to make this year different. Well, a double top is a double top. A head and shoulders is a head and shoulders. And then you look at seasonality and you're like, well, no, it's actually probable. You might be right. Maybe this year is different. Past performance does not predict future results. But what if 80% of the time, I'm making up a number here, but what if I said 80% of the time you should expect the S&P 500 to fall for the next 9 weeks? And then you open up your S&P 500 and you see a head and shoulders on the daily. It's set up from months ago. And now you're like, wait, 80% chance of down and we're at a head and shoulders? All you need is the catalyst, and guess what? The avalanche happens. We clear out a bunch of stops, and then the professionals buy everything back in, early in the second quarter. So we take out all the amateur retail traders and then we buy it back. Now, why do I say we? Well, because obviously some people know and most people don't. I'd rather be in the know. When I look at the top of the mountain, I want to say, that looks like an avalanche situation. I don't think I'm going to go on this run. Dang, huh? Yeah, this stuff's good. All right, euro dollar. Bearish, neutral. Pound dollar, bullish, neutral. USD yen, bearish, bearish. Aha! But look at this. We hit our conservative target. So our best case scenario on a 15-minute chart is take it down to the weekly S2. Okay. So down. Neutral, neutral, down, but almost done. We're bullish, but that doesn't look good right now. I'm going to wait until this linear projection turns north. Okay. The 21 starts pulling away from 55, which means the MACD will, it's above the waterline, but it's been falling back toward the waterline. But then it would turn and you'd have a MACD, bullish MACD crossover up, which is not here, but I can do the math in my brain. So anyways, linear projection turns more bullish. We get a higher high, higher low, and I will be buying dips on Aussie dollar. What do you stink? Smell like a plan? CAD, we're bearish. We have a pullback. Still, right? Still bearish here, still bearish here. We're still projected down, and we're at a moving average. Yeah. I wouldn't sell it just because of the 55, but if it rolled over, then yeah, maybe. Kiwi dollar, Aiden is bullish. And, oops, let's put it back in the previous. Okay. See how nice this is? What do we see here? Well, Kiwi dollar's bullish. The chart is bullish. We're up. We've made a higher high, but what else do you notice? We're already through the M4 R2. The next projection is R3. So really what you want to say is, or how you want to read this, we're basically done the day trade. These are all day trade, right? Day trade is done on that one. You waited till to New York and you're too slow. You should have traded Asia last night. Because then you would have bought it way below these prices and you're probably already out for profit. And now the Hail Mary is maybe R3. Well, that's why you want to combine your day trading with swing trading, right? Yeah. And that's just that simple, right? Notice that Aussie dollar is bullish on this time frame too. Beautiful little kickoff of the central pivot, beautiful kickoff the moving averages, blown through even the monthly now. Yes, we blew through the daily conservative targets, but we've blown through the monthly conservative targets, and our ridiculous projection is monthly R3, and we're pretty close to that. So according to our statistical analysis, we are getting to the most aggressive target for the month of January, which you've had for 26 days. You've known these numbers. Now, I spent 20 years building this. Like, this makes total sense to me. What doesn't make sense is trying to trade and you don't know this stuff. You're like, you don't know the target for January? Well, then how do you know to trade? You don't know the fundamental biases? Well, how do you decide to buy or sell? You don't know what institutional traders are doing? Well, then how do you know if you're going with the market or against the market? You're not tracking trends on 3 time frames? Well, then how do you know if you're long-term short but short-term long? I like you don't I, it doesn't make any sense, right? Wow, that's really changed today. Holy Snickers. Money. Wow. That really just increased in the last few hours. As soon as the market opened, boom, look at these positive flows, locking in those high rates. Wow. See, once again, I look at this and I analyzed it a couple of hours ago. I'm analyzing it again, and I already know that radical change in capital flow. Holy smokes. Just in the last few hours, but relative to last week and then relative to last month. Wow. Now, if you're a Forex trader and you're trading, but you don't have data like this, you're like, well, wait, I don't do treasuries. Oh, so you're not tracking capital flow? Are you tracking trade data? Like I'll show you. Okay. Institutional flow and stocks. Okay. Very important. That's the investment of institutional investors. But what about trade balance? Negative 29 billion. Negative 580 billion. Negative 23 billion. Negative 317 billion. Euro area, a billion, trillion, a trillion? That might not be right. You know, some of these numbers might be off. But anyways. Oh no, they're in their currency. Okay, that might make sense. But we're tracking this. Now, why is that important? You're like, well, Wayne, I'm just a Forex trader. I don't need to calculate that stuff. Oh, really? Get my drawing tool. Okay. You're like, Wayne, I don't need things like GDP, and I don't need things like trade balance. I don't care about inflation rates, even though that impacts interest rates, and interest rates impact whether you want to invest into that country or not. Well, it seems like you would. So, how do you track Forex? Well, GDP is consumption plus investment plus government spending plus exports minus imports. What do you think trade balance is? Exports minus imports. Are they running a deficit or a surplus? Japan is running a surplus. Europe is running a surplus. Australia is running a surplus. But not New Zealand. Uh-oh, what's going on, New Zealand? That's a red flag. Well, you should know. Oh, by the way, institutional investors are dumping New Zealand right now on the long term. Look at this. Australia has a surplus. They're buying it. Europe has a surplus. Buying it. Japan has a huge surplus. Dumping it. Yeah, levels of debt. But this should stand out to you. If you don't know, then you don't know. Okay? Something interesting going on with the UK, Canada. They're not exporting, I think, is one of their problems. So, looks terrible. Hey, looks terrible. So there are relationships, but what I'm getting to is trade balance is a component of GDP, but in of itself, it's actually Forex. Because prices do not change unless money crosses a border. So a dollar that moves from one person to another. Okay? So you eat at Applebee's and you pay for your meal with dollars. And you leave a tip for the waitress. But also some of that goes to the busboy. And some of that, and the profit or the revenue goes to buy food. And now the food supplier gets some money. And the truck driver that delivered it gets some money. Right? And the owner of the restaurant gets some of the profit. The insurance company gets some money. That money keeps flowing. And then the waitress goes and gets her haircut at Supercuts using some of her tips and some of her salary. The money never leaves the United States. It goes around, around, around. We call that velocity. And you can track the velocity of money, and in particular relative to the money supply. This is different because the value of the dollar is always going to be a dollar. A dollar is a dollar is a dollar. Okay, now you can increase the supply and lower the value. That's one thing. But when it comes to Forex, a major piece of the valuation is whether money is going in okay. We'll put this we'll put this as the United States. Sorry, United States. There's Florida. Either money is flowing in because we're exporting stuff out. Foreigners buy our currency and then place the order. So exports out equal money flowing into the economy. But then we take our money and we buy stuff from foreigners. So we might buy some goods from China. Dollar leaves. So what we're tracking is dollar crossing a border into the United States and then dollars crossing a border out of the United States. Exports minus imports. So this is showing you money flowing in and out of the United States, in and out of Canada, in and out of the UK, in and out of Japan, in and out of the Euro area. Okay. Now I have to see if we can standardize these because I think they're all in terms of the individual currencies. But anyways, I'll have to double check that. But what I care about the most is not the actual number, but the direction of the flow of capital. Money is leaving the United States and the US dollar is long-term weak and short-term weak. Oh. Okay. Money is flowing into Australia and institutional investors are piling in money into Australian investments. There's no doubt why the Australian dollar also happens to be strong. Yeah. There's no doubt why the Japanese yen was weak. Now, we're going through another period, but going back to the last COT, the long-term positioning for institutional investors has been heavily short yen. So we had that massive spike last week. Well, retail never saw it coming. Institutions spent months building up to that position. And what did they do? Week over week. Why is the yen strong this week? Look, they took profit. Now check this out too. This is as of Tuesday. So they got out before the peak and before the crash. Dude, there's some smart ass money out there. They were dumping the yen for months. That's what this means. Dumping it for months. And then 3 weeks before the Japanese yen pairs rolled over, 3 days before they exited. Dude, that's some pretty smart money. Well, how are you supposed to compete as a retail trader when you don't know these things? I don't think you can. You're not competitive. So, why isn't there fear with the NASDAQ and Dow? Well, we can take a look at some of those. Because it really comes down to your measurement or your interpretation of the measurement. And there we go. It took a second to update. Between now and the end of next month, this is supposed to be bearish. The COT score is bearish. And I believe the shorter term charts are bearish. Maybe not this one exactly. But another way of doing it with technicals. I mean, you can check the COT, but I already showed you that. But like if we go to swing trade or position, let's do swing. We'll do indices. Okay. What you want to do is combine and say, if we're going to go along with this idea that I presented earlier today, where the third week can create rallies because of earnings season and the Fed meeting, well, what you want to look at is this goes up, hits these targets, and drop. This goes up, hits these targets, and drop. Okay. FTSE has already hit. You see this? Plus, it's a bear. It's actually in a sell position. It's quite interesting. I say I would have missed that. See, I don't have to open my charts and go through all of these. I have them all presented to me. They're like bullish by a dip, bearish, bullish by a dip, bullish by a dip, bullish by a dip, bullish by a dip. But I also have projective targets. And I'm looking at two different analysis. I'm doing implied volatility over last week, I think it's using. Plus, it's doing linear projections, okay, based on the price action of the 4-hour chart. Plus, it's calculating standard deviation and then using that, right, to create best, and worst case scenarios. So it's doing lots of calculations. And so I can look at this and say, yeah, look at all the resistance up there. Yeah, I wonder if we can just keep on track with our base case scenario of getting to monthly M4 to R2. Or maybe it's going to accelerate and go way up here to monthly R3. But I have some concerns about seasonality. So like I'm getting all this data in a millisecond. And I can say, oh, well, maybe I want to pull this up on my chart and trade it. But, but you got to get to that decision first. One of the sins that amateur traders make is they go through their charts and find something to do. Okay? Yeah. Meanwhile, when you look at these swing trades, like, why didn't you buy it a week and a half ago? Why didn't you buy this days ago? Like, why are you just getting going now? So when you look at the position trading radars, they're doing annual projections. It's trying to help you be in trades for months, maybe quarters. So how's that helpful? Once again, buy. Short-term hold is here, longer-term hold is there. So the short-term goal is monthly pivots. The long-term goal is much higher, and it's yearly. Okay? I have to work on the scaling. But if you wanted to be in trades longer, so you don't like scalping, or you don't have time for day trading, or you find that your day trading is always late because you day trade during New York instead of London or Asia. I've always taught, if you're going to day trade, you trade the Asian fade. So showing up in New York and calling yourself a day trader is not right. You're at best scalping. But if you think you're day trading but you should be scalping, then you're really confused, right? So anyways, going back to this, if you can't sit in front of your charts 20 hours a day, what you need to do is swing trade or position trade. And this is where you might have an opportunity like this drop on the Dow is a clear buy. Fundamentally, long-term bullish, technically long-term bullish, obvious buying zone, nothing confused about this. Okay, and we've already hit, okay, you can see back here at the beginning of the month was the entry, monthly central pivot. Then we went to the monthly target, so it's a beautiful swing trade. Already achieved, dropped down again for maybe a second entry, and we're projected to probably test Dow 50,000 in the next short bit, like for example, right? Next short bit, as high as 51,000 just in the next 2 weeks. This is position trading where you could be in for weeks, months, quarters, 6 months. You could be long all the way till, the projected high. This is just 2-week projection. So if we remain bullish, my goodness, Dow is on its way. And again, it's not printing these prices off and cleaning it up, but I'm going to guess if that's 68,000 and this is 48,000, 58,000? 50, 58, 55,000 on the Dow? So imagine now you're like, oh, well, you have a projection of Dow 55,000. Would you treat this differently? You have a long-term plan. You're like, oh yeah, I'm buying dips. I'm a bull. I'm buying dips. And my target is Dow 55,000-ish. We'll see when we get there, and we'll check seasonality when we get there. So now you're looking for shorter-term trades where you accumulate. You buy dips and jam your stop. Buy a dip and jam a stop, and buy a dip and jam a stop, and buy a dip and jam a stop, and buy a dip and jam until you get to 55K. Oh, we just lost the U.S. price feed. So now you put everything else into perspective. So we already saw the monthly pivot. So we're already at a high zone for the Dow. So now what you want is the dip. All right, he's struggling with the price. Come on, Aiden. You can do it. Or maybe you can't. Let me try again. Come on, Aiden. There we go. All right. So, like I said, there's the monthly target. So there's the buy that you missed the very first week of January. This is a very basic trade. There's the buy. This is the buy zone. There's the conservative target. We hit it, and there you would expect a dip, and it did dip, and then it dropped to the moving averages in which you would expect to buy. You shoulda, coulda, woulda. And now what? Well, now we're on our way to monthly R3. The linear projections positive, but now you're like, this only gets us to best case scenario, 51,000. MR3 is going to be 50,000, and we know that's going to be a problem. Psychologically, that's a huge problem. But we also need a dip. This is just the month of January. We need to see into the month of February, which would be higher than this. So maybe the linear projection of our projection cone is correct. Our best case scenario is fairly correct, with the anticipation of this continues in February. So now you would need seasonality. What's the likelihood of it continuing in February? Right, you see? And that you are accumulating positions in the Dow with a target of 55,000, which might take half a year. But if you don't have any expectation of a half a year or 9 months, or whether you should be bullish or bearish at all, if you have no concept of, if you think all of this is a video game like Fortnite, you're wrong. Forex is about GDP. It's about trade balance. It's about constituencies around the world battling greed and fear and making real decisions about money. And if you can't see any of this, you don't know jack. You're going to get run over like a freight train. But luckily you're part of Forex.Today, so I'm here every single day for you. For some reason, I'm supposed to tell you to like, subscribe, and leave a comment, but it doesn't make a damn difference, so do whatever you want. Yeah. And did you know most of everything you saw
United
tonight
States
is free? Just so you know, this is free. This is free. These are a little slow to load because they're live prices. Okay, so these are free. Look, daily went from slightly negative to 0 to now bullish. A little bit of risk on. Remember my assumption this week would be a risk on. Well, we need to pay attention to this and see if it continues to move to risk on. This is exactly what I'm talking about. But if you don't know, you don't know, you know? And then what? Risk radar. Analyzing dozens. Okay, look, risk on. This is free. Look at the best calendar in the world. Okay, that's free as well. This is free. This is free. Okay, world's greatest deals, y'all. TRADARS.com. Not bad for free. It's actually pretty good for free. I might jack prices up to $1. If you're not willing to confirm your identity, then screw you! Actually, it's free right now, but that's actually a pretty good idea. Yeah, it's a freemium model, so you get tons and tons and tons of stuff for free. And then you can upgrade and get even more stuff for a little bit of money. And then the vision here is if you trade real money through our execution partners, guess what? What if you earned a rebate so TRADARS was actually cheap or maybe even free? My vision is you trade real money, you become a really good trader, and the broker covers all the cost of your subscription to our platform. Wouldn't that be cool if this was all free? Well, that's the vision. You're not sure what my vision is? I have written it here for you in the English language. If you don't speak no English good, use a translator. Peace on earth! Dude, this is so good! Life is beautiful! Peace on earth, may the pips be with you. May your profits be above average. So get your free account, even if you don't have more money. Get the free account, because at the very least, I could say, look at our following. Hey, broker, you should pay for this. So right now, we do have a program. Yeah. If you're able to open a Trader's Way account by connecting it to TRADARS, we have it inside. I don't have it published right now, but I will republish it. But the idea is you execute through Trader's Way. You get money put into your account from your spread. They're supposed to give me that money, but I'm like, no. I don't want to be an introducing broker, so just give that back to the client. And they're like, really? I'm like, yeah, seriously. So you get a little piece of your spread given back into your account as cash, but also then we look at your volume. And if you trade enough through volume, then I send you a PayPal of your subscription back. Yeah. So some of you here actually get TRADARS free. You pay for it and then you get a rebate back. Plus your spread is a little bit less than it otherwise would be, huh? Yeah. It's pretty good. I'm telling you, it's pretty good. I want this to be free for you. I want this to help you become a success trading and investing. Yeah, I want you to be happy and profitable. As well as informed and confident, huh? So anyways, gotta go. Peace on earth. May the pips be with you. May our profits be above average. Thank you, Traders Way.